Hi guys, welcome to the Simplify LLC channel. Today we're going to talk about how to choose between an LLC and an S Corp. If you are new here, don't forget to subscribe to our channel and press the bell icon to be notified when a new video appears. So you decided to launch your own business and you think an LLC structure would be the best. Once you get to this stage of the process, it's time to decide how your business will be taxed. This is where a lot of entrepreneurs get tripped up. Pass-through taxation, S corporation. It can definitely be confusing, but don't worry, we're here to clear it up and help you make the best decision for your business. First, let's be clear that an LLC, aka a Limited Liability Corporation, is a type of legal entity. It has to do with how your state recognizes your business. An S corporation is a type of federal tax classification. Technically, it's not a type of business. You can actually be an LLC and elect to be taxed as an S corporation. So, why would you choose this option? What are the benefits? Well, let's review the basic structure of an LLC. When you're a sole proprietor, you're liable for all assets of your business. This means that if you were to go into debt or be sued, you could lose your personal assets such as your vehicle, savings, and investments, and even your home. A limited liability corporation is just what it sounds like. Your business is its own legal entity with its own assets. Even if you end up owing someone or being found liable, your personal assets are off limits. Sounds good, right? However, you're still taxed as an individual. That's what we're talking about when we say pass-through taxation. The taxes on your business's profits are paid by you. If you don't say otherwise, the IRS will tax you as a sole proprietor or partnership, depending on the number of people in your LLC. Oh, and by the way, that tax is the 15.3% self-employment tax, which can definitely eat into your revenue. Because members of your LLC aren't considered employees, you don't need to pay them a salary or pay any payroll taxes. However, that means they aren't eligible for FICA or unemployment benefits. And they too will pay that higher self-employment tax on the company's profits. Plus, unlike a C corporation, you're only taxed at the shareholder level. So if your small business is fairly sizable and you expect to bring in a lot of revenue, you may want to consider being taxed as an S corporation. It will help you save on taxes, but you still get that liability protection. All that said, there are some special requirements for S corporation. Now first, you can only have up to 100 members, while regular LLCs can technically have unlimited members. All those members must be citizens or residents of the United States, and they must be actual people. You can't make other corporations or partnerships members of your S corporation. So if you have several complementary businesses, but you don't want one to be liable for the debts of another, you would have a parent LLC, but then you're ineligible for the S Corp status. Most importantly, you must pay all your shareholders a salary, and therefore you will incur payroll taxes. It's worth noting that the salary must also be a reasonable amount under the eyes of the IRS. For single-member LLCs, generally 40% is a good rule of thumb. So if your LLC makes $250,000 and you pay yourself $35,000, expect a letter from the IRS. This can work out better for shareholders as they don't have to pay the full amount of self-employment tax. They only need to pay the personal income tax on their salary, same as they would if they were a regular employee. Either way, you and all the members of the LLC can keep your personal assets safe from any financial or legal troubles. And your business doesn't need to pay any corporate income tax. It's completely passed through whether or not you're taxed as an S corporation. Are you still not sure which is right for you? Now, in a nutshell, most small businesses don't initially make enough money to benefit from the S corporation status. But once you start growing, you may find that your tax bill is getting too high. If you want to provide a regular salary to your LLC members and spare them the cost of self-employment, filing as an S corporation is a good idea. Here's how you would proceed with this. Now, assuming that you meet all the eligibility requirements, no more than 100 members, all US citizens or residents, and all paid a reasonable salary, you simply file Form 2553 with the IRS. Every member will need to sign this form. There's no fee to do this. Now just keep in mind that you will face some new administrative costs, especially for paying and filing payroll taxes. And remember, all shareholders of an S corporation must take a salary, or else the IRS will charge you some hefty fines. You may even lose your S Corp status. So play it safe and be sure that you can compensate all members of your LLC before you go for S Corp taxation. One final difference between standard LLCs and S Corps is the limitation on stock issuance. All shareholders in an S corporation must have the same access to stock benefits. so you're limited to one class of stock, basically common stock that gives your shareholders voting rights. This is definitely worth some consideration if you're trying to scale your business. Those stock benefits might be what gets investors in the door, but some startups have found that they need preferential stock classes to entice bigger investors. It depends largely on your business's overall growth goals and how many people you want at the table, so to speak. Now, I hope that cleared up some confusion. Ultimately, the right decision is up to you. It's always a good idea to chat with a tax professional or financial advisor to see whether S Corp taxation is right for your business. Well, that's it for us today. Thanks for taking a look at choosing LLC versus S Corp. Now, if you enjoyed this video, please like and subscribe. Don't hesitate to leave any comments. And also feel free to check out www.simplifyLLC.com for more information. Thank you again, and we will see you next time.